All right, so good to have you again. This is Market Formula, and this is where we talk about the technical analysis of the Nigerian stock market. If you are new to this channel and you like this kind of content, I will advise that you subscribe and turn on the notification bell so that every time I drop a new video, you will be among the first people to see it. Today, I'm going to be looking at the market, and I want to also give out a very useful indicator that I use all the time. And anytime you see me trading, I'm always with this indicator. I'll be giving it out in this video, and I will explain step by step on how I use it in risk management and how I use it in making trade decisions. All right, to look at the all share index of the Nigerian stock market. This is a new week, and in this new week, we can see that the market is already painting red. And mind you, have a very significant high, which is a very strong high. If you can look at what I have written on my chart here, you can see that this is actually a strong low. Why is it a strong low? Because it is a low that took out the most important high. Let me put a line there just to explain what I'm looking at. And this is the high. All right, that's the highest high that the market has ever touched. And this low, it went like this and came back, immediately took out this. So this is a strong low. And if you want to even look at it from this back also, we also have another strong low here. Look at it. This is a swing. This is a swing. You can look it like that. And this is a swing and swing. So, and in a big string, you can also have some minor swings. Swing like this. This is a swing. This swing. This is a 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 swing. And this is a swing. This is also a swing, and this is also a swing. All right, why am I looking at those swings? Because price moves in swing. When price is going up, it will not go on a straight line. It will either be going up and down, but every time it comes down and is going back up, it's going to break the recent high. That's why we say if it's in an uptrend, an uptrend will always have a higher high. So higher high, and also the low will be getting higher. So as it's going high, the low will be taking out the high. That's the theory behind uptrend. And in a downtrend, the high will be taking out the low. And if you look at this swing here, you can see we have too many swing. We can say, okay, we don't need this swing because there are too many levels to watch. Although there are times you might need to pay attention to that also. I'm looking at the weekly chart. Let's move it to monthly chart and we see what is actually happening in the monthly chart. So on the monthly chart, this is the month of May, and you can see that the month of May is actually a bullish candle now. But because this candle is still forming, we cannot really make decision based on this candle. The most important candle is actually here on this chart. If you are a member of my community or you have subscribed to my mentorship training, you would have understand what I mean by the most important candle. Because a candle is actually made up of five major parameters, right? So those parameters, you have the high, we have the low, we have the open and the close, then we have the volume that is in that particular candle. So this particular candle that I'm seeing here is the most important candle, and the high, the close of that candle is a very important price. Look at the close of the candle. Close of the candle is here. All right. So if this candle end up closing above the close of this most important candle, then we move this to be most important candle. But as it is now, we cannot decide or make any decision on a moving candle. That's why I switch down to the weekly chart, because the weekly is actually the leading indicator for the monthly, and the monthly is the leading indicator for the 3 months. And when we look at the whole share index, all share index is actually a lagging indicator. And what are the leading indicator for all share index? They are just the stocks that are listed on the Nigerian Stock Exchange. You can see we have many of them. So whatever happens to the stock is what will happen to the all share index. The all share index is not dictating what happens to the stocks. So we need to get this clearly. And there are times we need to pay attention to lagging indicators times we need to pay attention to leading indicator. But in this video, I just want to dissect all share index and tell you how what I'm looking at going forward. If the week ends like this, there's still no sellers pressure. At this level, I need enough sellers pressure. In fact, the sellers that I am expecting at this level should be able to take out this particular last week candle, which is this. At least if I can get it close below here, something similar to this that will close below here, then at that level I will mark this level as double top. But as it is now, it's not a double top because this top is not a double top. This particular candle can keep going up even if this weak candle ends up being a rare bearish candle. Then we need to still consider what kind of bearish candle, how strong are the bear. All right, so but looking at it, you can see I just want to explain the rationale behind this strong low and swing high and weak low. Why is it a weak low? Because it has not taken out the most recent high. This is a weak low until we have something similar to this. All right, that's when this becomes a strong low. Okay, that's when it becomes a strong low. But until then, we continue to watch and see what the market wants to do this week. We are not to predict, we are to react to whatever the market is doing. So as it is now, this is all that we can take on the whole share index. Okay, so let me now explain one very powerful indicators that I like to use. A lot of traders that I've met, they don't really understand what that indicator actually measure. But because you are a member of my community and or because you are a subscriber to my channel, I'm going to give out this indicator for you. So the indicator I'm talking about is actually the average true range. What is average true range? Average true range is just the average of the range of prices, or do I say the range of candles that are being formed on the chart. So when I'm looking at the weekly chart, for instance, this is the weekly chart. If I want to know what is the volatility, because average true range actually measures volatility. What is the volatility of this particular all share index? So I will, because of this video, let me take out one of my indicators because I need to take one out before I can add another one, because uh, this is a free plan of the Trading View platform. So average true range. So this is the indicator, average true range. When you click on that indicator, you actually see one line that is going up and down, up and down. But what is this line really measuring? What is it measuring? Let me check the settings of this line. This is just visibility, but what we are interested in is the input. By default, it comes with 14. What it means is that it's taking average based on 14 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So the 14 will end here. Let me draw a line. Let me draw this box just to take the 14 candle. So from here to here is actually 14. So it's taking the average of these ranges. And what do I mean by the range? Each of these candle has the highest price and the lowest price. Subtract the highest price from the lowest price. Whatever you get, put it somewhere. Subtract this one, put it somewhere. Apply until you get 14. Then you now have 14 input. So those 14 input, now divide it by 14. Okay, that is how you get that average. But you don't really need to calculate that average because this indicator is already measuring it based on 14. So if I need to maybe calculate based on higher, let's say I need to calculate based on another period, then you come to the setting here, setting, and I will say, okay, actually, I like doing multiple of the indicator setting, or I divide by 2. Because if you start then playing with different numbers, you are only going to complicate things. Whenever I pick an indicator and I want to adjust the setting, either you do multiple of 2 or you do division by 2. So if I divide it, if I need it to be more frequent, I want to measure it on more frequent basis, I can use 7. So when you say okay, so this average that I'm looking at now is now measuring based on 7 candles. 1, 2, 3, 4, 5, 6, 7. So the average is actually going to stop here. 1, 2, 3, 4, 5, 6, 7. So the average of these ranges of these candles, let's even look at the range of the candle. How do I get the range of this one? Looking at my parameters of price, when you put your crosshair there, you can see the high. The high is at 105, 724.58. Subtract it from the low. What's the low? The low is 105 and 423.3. Then subtract it. Whatever you get, put it somewhere. Subtract this one also. Whatever you get, put it. Whatever you get, put it. Whatever you get, then divide it by 7 because I'm using 7 period. But I don't want to use 7 period. Let me just stay with what the default is saying, just to explain how I actually use this indicator. What is most important in this indicator to me is actually not this line, because I don't really follow that line. What I follow is the average range of the current candle. Okay, let me even do something. This is 7, average range of this 7. When you come here where you have ATR 14 RMA, what you are seeing is actually the current ATR. Let me change this color because it's not very visible. Let me change the color. Let me change the style, the ATR. Let me make it white so that we can easily see that value. All right. So the value, you can see as I'm moving is changing, but the one I am interested in is the current one. So on this current one, we have 1,542, 43 rather. Okay, 1,543 basis points. So on an average weekly, this index is moving 1,543 basis points. I see ATR more like the speed of that particular instrument I'm measuring. It could be any stock. I'm still going to take example of maybe 2 or 3 stocks, and I'll tell you how I use this ATR to gauge either my exposure, because you want to know how fast the instrument is. When you learn how to drive, like me, when I was learning how to drive, I didn't learn to drive by speed. I learned to drive by driving slowly. That's how to learn. You don't tell me that when the first day you started learning to drive, you were doing 120. You cannot. You will be doing just gently. Then when you now perfect it, when you now perfect the driving skill, then you can now start driving with speed. But until you perfect that skill, please don't go for high speed. I tell my students, you need to know the speed of that instrument you are trading. And in this video, I'm going to expose that secret. What is the speed of this? The speed is actually 1,543 basis points. Then how do I make sense of this? Remember, we are looking at the time frame. I can measure it on daily, but on daily, what is this showing me? Saying on a daily basis is moving an average of 597 basis points. On a weekly basis, is moving this. On a monthly basis, is moving this. It now depends on how long you want to measure your ATR. But I will recommend, if you want to be taking trade weekly, use weekly ATR. If you want to be taking trade monthly, use monthly ATR. What I mean by taking trade weekly or taking trade monthly. For instance, I'm watching Access, for instance, and I want to buy Access. If I get Access this week, I don't buy my full position. I don't take it once. But if I take part of my position this week, I will have to wait till next week. No matter what the market is doing, they call it volatility. And that is what this indicator actually measures for us. It measures the volatility of that instrument you are trading. So if I know that the volatility is, for instance, in this case, is showing me, let me go back to the weekly, is showing me that it's moving an average of 1,543. So if I buy this week, I have to wait so that I can reduce that volatility, the speed at which that particular trade or instrument is moving. And how do I apply it again? If it's moving too fast, it means that I will look at my money and my money withstand this volatility. If it's moving too fast, then maybe it's not the best trade I should take if considering my capital. But if your capital can withstand the volatility, and volatility is always seen as the randomness in that particular stock you are trading. How random can it move and it will still be going your way? That is what it means. It means that, okay, let me measure the randomness in this particular stock. If it's moving randomly, how far can it move away from my entry, or how far can it move away from the opening, and it will still be right? That is the essence of volatility. And how do I now use it? So you now see, okay, on an average it's moving further. I will now bring out my calculator. All right, so this is my calculator. I need to know what is the opening of this particular candle, because I need to know when the week opened. The week opened at 108,747. So I'll say 108,747. This is the basis point, and it's moving an average of what? It's moving an average of, let me see that again, 1,542, 43. So let me use that 1,543. I will now say this 1,500, let me copy this. So I will say 1,543 divide by what I copied, whatever I get, this is 0.014. So multiply this by 100 because I'm looking at the percentage, 100. So the index is moving an average of 1.41, let's say 1.42% on a weekly basis. That is the speed. That means it's moving 1.42% per week. 1.42% per week. So when I know this, I will now use this to calculate, to discount whatever I'm seeing on the chart. I can now use that ATR, the value I'm seeing, to discount where I want to enter the particular stock. So if I take an entry this week, I'll wait till next week, because next week this thing will show me another thing. Upper week, this week will show me another thing. So in a month, I will have like 4 different entries, which is fine for me. If I'm buying a stock of 100,000 naira, instead of coming one day and buying everything, I can split it and do 25,000 this week, 25,000 next week, 25,000 for 4 different weeks. By doing that, I've reduced the speed at which that particular stock is moving. Let's now take example. I'm going to take like maybe 2. Okay, let me look at access. Let's see access. Let's see what is happening to access. So for access, all right, let me delete all this because I'm using this to track my entry. For access, this week, what am I expecting access to do? Access should do 1 naira 61 kobo. So based on the current ATR, so 1 naira 61 kobo, I need to discount that based on the entry, the opening of this particular bar. This week opened at 21 naira 50 kobo. No, sorry, 21 naira 50 kobo, right. So since it opened at 21 naira 50 kobo, bring out my calculator. 21 naira 50 kobo, 21 naira 50 kobo. All right, sorry. I'll divide the current ATR, which is 1 naira 61. I can do 161 divide by 21 naira 50 kobo, which is 2150. 2150. I've just converted it to kobo. This is going to be 1, 2 multiplied by 100. So on a weekly basis, I'm expecting this particular stock, which is access in this case, to move 7.5%, 7.5% of this particular. So if the stock goes against me 7.5% of the price I entered, I should not panic because it's still within the randomness I expected in access. Do you understand this? That is how I make use of this particular indicator. Very, very powerful indicator. And this is, if you ask me to rate all the indicators that I have known, this is like the best indicator for me. But indicators are known to lag, but this one is like it doesn't even lag because it's telling me the true what is actually happening, the percentage at which you expect that particular stock to move. And if I want to work based on monthly, I can come to the monthly and see what is the ATR on the monthly chart. Current one is telling me that I expect it to move 3 naira 13 kobo. So 3 naira 13 kobo, bring out your calculator. 3 naira 3 naira 13 kobo, 313 divided by what is the opening of this bar? I need to know the price that it opened. It opened at 22 naira, which is divided by 2200. This is also 14%. This is 14%. So multiply by 100. So you now get this is 14.2%. 14.2%. So you can now use that 14.2% to discount whatever you want to use as your entry. So 14.1% of this, what is it? So that is how you now use ATR for your entry. For me, I'm looking for access at around, if I can get access at, I'll start buying access from, let's say 19 naira 50 kobo. If it comes lower, I still have other levels I'm going to buy access. Looking at this low, this is a strong low because this low actually took out this high. So this is a strong low. This is the most important low that the market must not break because this is the low that caused the highest high. All right, so anything in between here, I'm looking for entry. Let's take another stock. Let's look at let's see Zenith Bank, and that's where I'm going to stop in this video. It's getting too long and I didn't expect it to be this long. For Zenith Bank, let's look at Zenith Bank. What happened here? Here I'm looking at, okay, let me take it to, oh my god, this is a continuation pattern. I like this pattern. Anytime I see a rejection bar like this and the next bar now closed above it, haha, this is a continuation pattern. It means that this stock is actually still going higher, but it's not good for fresh buyers. It's only good for people that have it to hold it. It's good for hold, not for buy. I would rather want to buy this particular stock when it was around here, okay, which is 25 naira. At that level where it is now, just allow it to keep going up. If you have it, hold it. That's what it means, but it's not for fresh buyers. All right, let's look at it on the weekly. So what's the volatility I'm expecting for this week? What is the ATR? ATR is 2 naira 21 kobo. So for 2 naira 21 kobo, all right, let me bring out my calculator. 2 naira 21 kobo, that's 2 naira 21 divided by what is the opening of the week? The week opened at 48 naira 85 kobo. That's 4885. All right, so whatever I get, so this particular stock is moving 4.5%. 4.5%. So 4.5% I should expect. If the stock lost 4.5% in a day or so, it's time for you to buy. That's what it means. Because that's what you want to use to discount this particular stock and it will still be valid. And I have some other tweaks to it. Maybe if you want to learn more about this indicator, you can just subscribe to my mentorship class. And in fact, I have a mentorship group that is just free. Okay, you can just start with that, because once in a while, and even often, I drop some tips that can help you in your investment journey, especially if you are looking to investing in the Nigerian stock market. Okay, this is where we are going to stop this video today. Until next time, when we have the opportunity to share something like this again, I wish you all a very profitable week ahead. Bye for now.